Good morning, everyone. My name is Adrian Tong, Senior Analyst from Media Partners Asia. It's good to be here at the 2023 Asia Hub Media Summit. I would like to thank the organizer for having me again. Today, I would like to share with you some insights on latest and future trends in online video in Asia Pacific and in Taiwan. I will also cover some content consumption trends in the region, leveraging on latest proprietary data from our in-house measurement panels from AMPD. So let's get started. As we look at the overall video industry in Asia Pacific, there's a continued shift in monetization online. As we can see on this slide, we are capturing video industry revenue across both online and TV, but exclude theatricals and exclude China. China is a massive market on its own. If we excluded the video market in the region, we generate close to 81 billion this year, having grown 5.2% CAGR in the past 5 years. We project the market to continue growing at 3.3% CAGR to almost 95 billion by 2028. As much of TV continues to transition online video share will continue to grow to 37% this year, up from 15% in 2018, and online video will continue to erode TV share and expand up to 48% by 2028. Looking at the individual market territory, Australasia remains attractive with 3% growth, 11 billion in revenue size. Online video is the key growth driver, driven by advertising at domestic BVOD platforms and SVOD such as Netflix, Disney+, Binge, and Paramount+. Price increases across the board are also helping to drive revenue growth. India leads growth with 5.6% CAGR to close at 17 billion in 2028. Television will remain the dominant segment, accounting for 70% of the video industry revenue, but will remain under pressure as audiences become polarized between free-to-air and connected TV, which is growing rapidly in both reach and consumption. Advertising is still the primary driver behind online video, driven by premium inventory across Jio Cinema and Disney+ Hotstar. Japan is the largest market after China in the region, 32 billion in revenue size. Pay TV is high ARPU, low churn market, but hasn't really grown. TV lost some share, but not as big as other markets. SVOD will continue to grow in Japan and remains attractive, and premium AVOD expansion is driven by local BVOD platform TVer and freemium service ABEMA. And the UGC social component led by YouTube is sizable at 14% share of industry revenue and will gain share up to 19%. Korea is a 12 billion market, growing at 4% CAGR. The market is consolidating, with merger happening between TVing and Wave. It's the second round of merger for TVing after its consolidation with KT Season 1 year ago. Telcos continue to dominate video distribution, but are starting to see IPTV growth flatten with some disruptions from Netflix. DTH and cable cord cutting is becoming more prominent in Korea. In Southeast Asia, Indonesia leads growth and scale, but more broadly in these markets, apart from Philippines, the pay TV market is shrinking. Indonesia has suffered double-digit declines across free-to-air with analog switch-offs. Indonesia's SVOD market grew much slower this year, with high levels of churn, reduced investment in local content and marketing, and growing demand for short video led by TikTok. Taiwan's video industry will generate 2.8 billion in revenue. Pay TV is the largest segment and retains 64% of the pie, with cable TV still leading in monetization, but will lose incremental share to online video that generates 0.9 billion in revenue, with SVOD and premium AVOD driving expansion. Revenue from FTA industry is much smaller at 3% share. So the next slide looks at the overall online video market trajectory in Asia, excluding China again. The online video industry today generates 29 billion in revenue, having scaled rapidly from 10 billion in 2018 and will continue to expand to reach 46 billion in 2028. UGC AVOD and social video remains mass market, with YouTube, TikTok, and Meta leading the category, growing 9% CAGR and maintaining 47% share of industry revenue by 2028. Overall, SVOD revenue will grow 6.4% CAGR, with Netflix leading the segment. Premium AVOD is a key growth component, with 3 billion in revenue today and will expand close to 18% CAGR, driven by local players in Australia, India, Indonesia, and Japan. Excluding China and Australasia, Japan is by far the largest market in terms of online video revenue, both across SVOD and AVOD. India is growing rapidly. It is the ad economy of the future and overtakes a lot of the markets. As you can see, it's 2.8 billion AVOD market and 1 billion in SVOD. Korea is ahead in SVOD, 1.5 billion in revenue, and with 2.2 billion in AVOD revenue, it is the third largest market after India. Indonesia ranks fourth with 1.3 billion in online video revenue, and Taiwan 0.9 billion. But what's interesting is, in spite of Indonesia's much larger SVOD subscriber base, it trails behind Taiwan in SVOD revenue because of its low ARPU, but it is the fourth largest in terms of AVOD. In Taiwan, the SVOD market continues to grow, driven in particular by Disney Plus and Netflix, and telco-backed services MyVideo, Friday, Hami Video that expand on top of attractive bundle offers. Taiwan's online video market will generate 0.9 million this year. Thailand, which is slightly behind Taiwan, is the largest SVOD market in Southeast Asia, led by Netflix, followed by telco-operated aggregators TrueID and AIS Play, who tap into large broadband and pay TV bases to convert a substantial base of high ARPU SVOD customers. This slide shows a deeper look at the premium VOD category with projections. India once again leads growth at 16%, scaling rapidly from 1.7 billion to 3.6 billion, increasingly driven by advertising that contributes 60% of the pie. In other markets, SVOD will still contribute the majority share of the premium VOD revenue, but advertising will help the premium VOD category monetize in key high CPM markets, especially in markets like Japan, Australia, and Korea. In Taiwan, premium online video category will generate revenues of 640 million in 2023 and will expand to 970 million by 2028, driven by Netflix, Disney Plus, Line TV, and telco-based services. As we look closer at Taiwan, our research shows SVOD is overtaking traditional pay TV, cable TV and IPTV combined to become the dominant pay video service in 2024 in terms of subscribers. Total SVOD subscriptions will reach close to 7 million subs versus cable TV's 4.6 million and IPTV's 2.1 million. Rising competition from SVOD is driving cable cord cutting and eroding growth momentum on Chunghwa's MOD. SVOD subscriptions in Taiwan have scaled rapidly in the past few years, but going forward, SVOD subscriber growth will likely see a slowdown in net adds as the market starts to mature. There will likely be more players entering Taiwan's crowded market, with Max expecting launch next year and potential entrants from Korea. But at the same time, there's some consolidation happening, especially among the telcos between Taiwan Mobile and Taiwan Star and Far EasTone and APT. We see some recent attempts for platforms to expand on ARPU. In November, Disney Plus introduced a higher price premium tier, and earlier in May, Netflix initiated a crackdown on password sharing by charging extra fees on shared accounts, helping to drive incremental revenues. We estimate more platforms will likely follow Netflix and Disney Plus footsteps to expand monetization through incremental charges or pay tier upgrades. We estimate SVOD revenues will continue to expand 8% CAGR to reach close to $730 million in 2028. ARPUs will also rise to $7.3 US. In other markets outside of Taiwan, key platforms in the region are raising prices. As mentioned, Disney Plus revised their pricing strategy and launched new premium tiers in key markets in Japan, Korea, Hong Kong, and markets in Southeast Asia. In India, Amazon increased prices by 30 to 67%. Viu had 15 to 30% price increase in Indonesia and Philippines. CJ's TVing remains competitive, raising prices in Q4 with plans to introduce ads in 2024. Apple TV Plus, they had a 15 to 47% increase in various markets, video in Indonesia and binge in Australia as well. In the next few slides, I want to showcase some of the latest consumption data from our measurement panels from AMPD, which is a brand under NPA. As you can see, UGC consumption on YouTube dominates in most markets like India, Japan, Korea, and Taiwan. In Southeast Asia, YouTube still dominates consumption, but TikTok also has a strong presence with significant viewership. Premium VOD remains impactful in North Asia markets like Korea, Taiwan, and Japan, and also in India. This chart shows premium VOD viewership share by content origin across various markets. Clearly, in a lot of these markets, Korean is significant in its travelability, especially in Southeast Asia, and is approaching 18% in Japan. Western content, especially US, has significant reach with large base of title supply from Hollywood, and engagement is especially strong in India and Philippines. This chart only captures content demand, but on the supply side, Chinese titles is also significant in the region, and consumption is strong in Taiwan and emerging in Thailand. Chinese in this chart will include Taiwanese content. Local content dominates in Japan and Korea. In Korea, local viewership is driven by Netflix, TVing, Wave, and Coupon Play. In Japan, the local segment is split between anime and live-action content, and we see a good amount of Korean driven by Netflix. In Southeast Asia, Korean content is driven by Netflix and Viu primarily, though Amazon, Disney, and even local players are increasingly offering Korean dramas. Japanese, largely anime, contributes about 10 to 15% of viewership in Southeast Asia, where local content is still strong in Thailand and Indonesia. In Taiwan, local content is significant. At the same time, we are seeing an increased supply and demand of mainland Chinese titles on some key platforms. The next slide shows the top episodic titles ranked by reach or unique users in the first half of 2023 based on data from our research from AMPD. The top titles reflect the trending origins, a testament to Netflix's strength in Korean drama and Viu's strength in Southeast Asia. Korean dramas and local shows tend to perform well across most markets, with Netflix original The Glory topping the chart in Indonesia, Taiwan, and Thailand, and Taxi Driver on Viu also does well. In Japan, the top 5 are all local titles, especially animes and dramas. Looking at Taiwan, the top titles have a more diversified mix, with local thriller Copycat Killer in the second spot, followed by Japanese anime title Chainsaw Man on Netflix, US series Wednesday, and mainland drama Unchained Love. In Indonesia and Thailand, local strength is represented through originals from Video, WeTV, and licensing by Viu. This slide captures content investment trends in Indonesia, Korea, Taiwan, and Thailand. It's interesting to see in Korea, after years of expansion, content investment is starting to level and likely to decline as margins are under pressure and the industry is turning to more cost-effective programming like variety and reality shows, especially on TVing and Wave. And there's the ongoing shift to online as global streaming giants invest along with local players CJ and TVing. This trend will resonate in Indonesia, Thailand, and Taiwan, where online video is driving content spend and gaining share. While investment in TV content remains significant in Taiwan, we see a continued shift in content spend, especially as more OTT platforms invest in originals and co-productions, and also increasing budgets on title acquisitions. At the same time, the portion of investment going into theatrical content will likely remain steady state. Here's more information about our company. I hope you enjoyed this session, and I will see you next time. Thank you very much.